What's going on, everyone? This is just going to be a quick, what do you call it? Little video on an A plus trade setup as I see it using the dots bias indicator. So left is a 1 minute chart, right is a 30-minute chart coming into the day. If you look on the right, I like to use prior lows, prior highs, London lows, London highs, Asia lows, whatever, for obvious liquidity. And then I like using the dots in the direction of said liquidity. So if you look on the left-hand side, the market opens on this vertical line. We trade up to the VWAP, which is this blue line, make a lower low. We retrace into 50% of the NYSE high to low. So this is a starting point. So this isn't necessarily a take. Some people, if they use a one dot entry function, which is selling the close of the 1 minute candle that lines up with the first column of all red dots. This could have been a break even, stop out. I actually just scalped it to this low candle, but neither here nor there. So we get a retrace to 50%. Wick, wick, wick. You can see we're holding it. EMA is holding, and then we start selling off, and then the dots turn red. Again, you could do a one dot entry function. Shorting here. This fair value gap holds. So the fact that this 1 minute fair value gap was holding, this 50% was holding. Dots are red. All confluences I like to see. So the setup that I'm referring to, being an A plus, is combining the dots and fibs. So we get this 50% level, high, low, 50%. Normally, in normal functioning measured moves, will bounce at the negative 23%, and then if it's a measured move, we'll come back up to around the 50% and then keep going. When we get an extended move, so to the negative 23%, through it, and to the negative 61.8%, rather than draw another fib from a high to a high, you do low to a low. And so we have extension fib, we have red dots, and then we have clear liquidity. You enter here. ATR at the time was about 30-ish points. Stop at the 1 minute ATR. Enter, scale out maybe halfway through, or whatever, to reduce your risk, and then let the trade either work or not. That's basically it. So you have liquidity that you're targeting, you have dots for bias, narrative, direction, and find your entry function. So I like using fibs, specifically. In this example, you have fair value gaps holding, you have EMAs holding, moon cycles, whatever the hell you want to use. So dots for bias, backtest with your entry functions to see if the dots work for you. 7-day free trial, link in the bio. If you want to try them out, Merry Christmas, Happy Holidays. Reach out with any questions. Thank you, buddy.